Yo, what is up guys? Welcome back to episode 3 of Mastering the Market. This is my completely free ultimate Forex trading course that I've used to help myself make money in the Forex market and become a full-time trader. Now, in the last episode, we discussed how I find my support and resistance levels, how you can look at where the rejections are in the market, and all of that stuff that you're gonna need before you watch this lesson. So if you haven't watched episode 2, go back right now, watch episode 2 and understand exactly how I find these levels, and then come back here and continue with the course. But without further ado guys, let's get into the lesson. So we're going to start off with Euro USD here. Now this is one of the two main pairs that I trade. I do recommend everyone picks two main pairs. I trade gold and Euro USD. Even one main pair is fine actually, but I trade two at the minute. Essentially though, what we're going to do is we're going to do a thing called top-down analysis. So this is today's lesson. It's going to be top-down analysis, and this is how we look at the markets. So what we're doing essentially is we're starting off from the weekly time frame all the way up here, and we're going all the way down to the 30-minute time frame. That's why it's called top-down analysis. You start from the top time frame and go down all the way to the lower time frames. Now you can go to the 15 if you want. Most of my entries, if I'm honest, are taken off the 30 and the 1 hour. So because of that, what we're going to do today is just go down to the 30-minute. But let's get straight into it. So the first thing I want you to find is the bias. Now, you might be asking, how do we find this bias? Well, essentially the simplest way is to be looking at the previous daily or weekly candles. So looking at the previous weekly candle, at the time of recording this, it is the weekend, so this weekly candle has closed. Therefore we have closed bearish, and that means that, you know, our bias for the next week is going to be bearish still, because probability wise trends do continue, right? So if we're in a bearish trend, which means we're going downwards overall, that trend is likely to continue, more likely than it is to reverse. So because of that, on the weekly time frame, we are going to be bearish overall. Now, something that you do need to look at as well is whether or not we are tapping into any levels. So you can see here that we have tapped into a rejection area before that we've tapped into and rejected off of. So maybe that might be something that we can take into account. However, we're going to need to wait and see on that one to see how we open up next week. But that is something to take in mind. Now, on the daily, you might be saying, you know, SG, the previous daily candle closed bullish, so that means we're bullish for the day. That's technically not true, okay? Technically, in some circumstances, yeah, we could be bullish on the daily, but however, in my honest opinion, we have closed respecting these resistance levels here. So we've rejected back off this level, tapped into it. It is likely that we are going to continue this downwards trend from these candles here. Whilst we did tap into this support level, I think it's more likely that we do continue to follow to the downside. So that's something you need to be looking at when you're trying to decide what the daily bias is. Now this candle did also close weak bullish, right? So had we have closed a little bit higher up, that might have been an indication that we're going to continue to push back upwards. But it's a weak bullish candle, right? It didn't push very far up. It came up and rejected back down and almost closed doji if you'd like. I'll explain what a doji candle means later. But we did almost close doji, so it is an indication for me that we are going to push downwards. So that being said, we are going to have our daily bias as being bearish for the day, and we're going to use that in the next steps. So now, as the next part of our top-down analysis, we are going to be looking at the 4 hour. Now, if the market was open, we'd be saying, right, this 4 hour candle might have come up, grab liquidity, and be looking to flip. Now, we'll discuss and price action and all that stuff in the next episodes, but essentially, for now, having that no bottom wick could be an indication that we were going to continue to flip and come down. However, the market is now closed, so we're not going to take that into account too much. Dropping down to the 1 hour now. Now, what can we see? Well, the 1 hour is the time frame where we're going to start putting our first levels. So what does that mean? As we discussed in episode 2 of the course, again, if you haven't watched that, go back and watch it here. What we are going to do is we're going to start placing our support and resistance levels on the chart. Now, the 1 hour is probably the easiest time frame to do this on. When you start getting down to the 5 or the 15 or whatever it is, look at this, it's just completely messy. It's going to be very difficult to do that. The higher the time frame, the less mess, right? You can see the 4 hour is less messy than the 1 hour, but you know, the 4 hour closes a little too infrequently for us, so we're going to use the 1 hour to chart our first levels. Now, what I can see here straight away, as we discussed last episode, is that we have a little resistance up here at 107,986. So we're going to plot that on the chart. Now, this is where the first new piece of information comes in. So, since, like I said, the daily bias was bearish, we are going to be looking for two ranges to the upside. That means that if we're going against the daily bias, i.e. we're bearish for the day, but if we're going bullish, we're going to wait for two ranges to be broken out of. So we're going to call this one range 2, and this one is going to be range 1. And essentially, if we do start to get some closures above this range, that's going to be a range 2 breakout, and we're going to be able to take that for buys. But I am going to explain that in a later episode for you guys. We have that now, and you might be saying, right, do we need 2 levels to the downside? No, since we are going with our bias, then we are going to only need 1 level to the downside. Now, there's sort of a level here at 107,874. However, I am seeing this little rejection over here to the left, so we're going to push this down a little bit, and this is going to be our sell level. Looking to the left, let's see if these levels are correct like we did in the last episode. I'd probably be moving this one up a little bit, chat. Maybe we push it up to this level here just so we don't get caught in any of this choppiness. Other than that, I do believe our levels are correct. Yes, chat, this looks good. This looks good to me. So, other than that, these are going to be our levels for the day. Now, we have done the 1 hour chart markup now. What I'm going to do is I'm going to put my little templates on. So, if you do want to set these templates, I have buys above. I have my buys above for range 1, as we discussed. So, as we discussed, we need a breakout of range 1, then of range 2. So this means that we have range 1 here to tell me not to take buys above here. But if you do want to set these templates, all you do is you go double click on here, type in the text you want, so you can go sells below, and then that indicates to us that we're going to have sells below this level. We're going to put closure here as well, just to remind ourselves that we need to wait for a closure. Then we're going to go to template, save as a template, and then we would put cells below or whatever you wanted to call the template. I already have them, so I'm not going to do it. But that's essentially how you're going to set those templates. Now, the next thing we're going to do is we are going to drop down to the 30 as we discussed. Now, the reason for this is if we are taking entries on the 30-minute, we need to be using the 30-minute levels. So essentially, what we're going to do when we get down to the 30-minute, since we already have our overall levels, if we are taking entries on the 30-minute, we need to make sure that we're using the 30-minute levels. Now, as you can see here, this level seems to just not be right. So what we're going to do is we're going to push this away from price just here. Make sure you're never moving it towards price. So we would never pull it down to this level here. That would not be good. We don't want to do that. So we want to always be moving it away from price like this. And that is what we're going to do. We're going to move this level up here. This one needs a little push down. Other than that, we are completely good. And then what I'm going to do, just because these levels aren't completely accurate, is I'm going to pop on these little rectangles here just to give us a little bit of a buffer room right there. Now, what I would say is whenever you're going to start trading for the day, maybe you trade New York session, maybe you trade London session, whenever you start getting on the charts, do this little breakdown here like I've just done, top down analysis from the weekly all the way down to the 30-minute. Set your analysis like this, and once you have your chart marked up, all you need to do is start waiting for closures outside of the range. Once you start getting closures outside of these ranges, you can start to take entries if price prints the certain way that you want to. Now, I'm going to tell you exactly how to find the entries in the next episode. But before we do go, chat, I'm going to give you another piece of homework like I did in the previous episode. I want you to go and do this top-down analysis exactly like I've done here with 2 or 3 of your favorite Forex pairs. Could be gold, could be Euro USD, GBP, JPY, whatever it is. Go and do that. Join the Discord down below and send them to me, and I'll check if you've done the levels correctly for you. So you can sort of bounce your ideas off me, see if you're doing it right. And other than that, yeah, that is going to be it for today, guys. Just make sure you do go and check out the previous episodes if you did miss them. And in the next episode, I'm going to be teaching you exactly how we find those entries and get into a trade. But thank you very much for watching, guys. Please leave a like and subscribe if you did enjoy the content. Hopefully it's very educational for you guys. And other than that, if you do have any questions, please feel free to leave a comment down below. But that is going to be it for today's episode, guys. Peace out. Thank you very much. See you all later. Bye-bye.